According to the recent Treasury bill auction, the market interest rates have continued with their declining trend, hitting a low of 11.4% as per these results. While the market interest rates are declining and pulling down with them the returns that are paid out across many investment vehicles, there are other platforms that have posted above alpha returns to their investors. This special fund paid an actual return of 29.32% for the period from its inception in February 2024 up to or end of October 2024. We are talking about the results of AOK Africa Special Fund, or simply AOK Special Fund, as per our analysis. We'll be looking at the details of this special fund that has been tailored and operated to optimize returns to its clients regardless of the market conditions while minimizing the risks, the investment risks. This fund attracts moderate risks as compared to the money market funds, which are of a low risk profile as per their categorization, and therefore it requires stringent risk minimization measures, which we'll be looking at later in the video. We'll be looking at the details of the fund manager, the fund fact sheet, and these asset allocations after 3 seconds short break, so don't go away. In the meantime, if this is your first time in this channel, bless us with your subscription and don't forget to hit the notification button so that YouTube gives you a notification when we upload our next value-packed video. If you get value from this video, don't fail to give us a like or a thumbs up to the video and engage us in the comment section. See you after 3 seconds short break. Welcome back to AOK Special Fund. According to this schedule, AOK Special Fund is powered by Faida Investment Bank. So Faida Investment Bank is the fund manager. Faida Investment Bank is not new in this noble business of creating wealth for its clients. They have been around for the last 30 years. The individual behind the investments, or the chief investment officer, is this gentleman, Mr. Ian Kangara. Mr. Ian Kangara has accumulative experience in the business of wealth creation, summing to 16 years. This fund, as we had stated earlier, was launched in February 2024, and by the close of October 2024, it had delivered actual returns amounting to 29.32% to its investors. The fund has an AUM, that is assets under management, amounting to 0.8 billion for that short period from February to October 2024. And that is a pointer to the level of trust by investors to the fund manager. Above or on top of the AOK Special Fund, this fund manager, Faida Investment Bank, runs other 2 collective investment schemes, that is a AOK Money Market Fund and a AOK Fixed Income Fund. The fund manager, that is Faida Investment Bank, has a physical location with its head office situated Crawford Business Park, which is located along State House Road in Nairobi. And they have a CBD office, or an office that you can pay a visit within Nairobi CBD, which is located at Windsor House first floor, which is located at the junction between Mwindibingo Street and the University Way. Earlier on, we have referred AOK Special Fund as AOK Africa Special Fund, and that denotion of Africa, this fund manager has a physical office in Luanda, Kigali, which is situated at Centenary House first floor in Kigali, Rwanda. Those are the physical offices because it's important as an investor not only to invest with a fund manager, but also have a physical place where you can pay a visit on above the online channels. We'll be looking at the fund fact sheet details next. According to this second schedule, Hawk Special Fund is a form of collective investment scheme that closely compares to a hedge fund or a mutual fund. Being a collective investment scheme means that just like money market funds, it is pooling resources from different individuals and investing those resources on their behalf. The fund manager, as we had earlier posted, is Faida Investment Bank, which is properly regulated and registered by Capital Markets Authority. The investment vehicle or the product itself, that is AOK Special Fund, is also registered with the Capital Markets Authority. The base currency is Kenya shillings, while investments can be done on diverse currencies depending on the markets where those investments are done, because this fund not only invests in local markets but also global markets. The base currency upon which they distribute the returns, not interest, the returns, and the return because that this fund operates different classes of assets, bringing in different forms of returns. There are commodities that will bring in profits. There are products or there are assets classes that will bring in interest. We have other asset classes that will be bringing in forms of dividends, and therefore we cannot use a specific income term to denote the returns. So generally for this type of a fund, we talk of the investor return or incomes. The risk level or categorization for this type of a fund is form of a moderate risk, and the fund inception was in February 2024. The investor ecosystem or the investment ecosystem, which includes the trustee, the custodian, and the auditors. The custodian for this fund is Kenya Commercial Bank and I&M Bank. So there are two custodians for this particular fund, while the trustee is Cooperative Bank, and the auditors are Bayer and Associates LLP. The targeted returns for this particular fund is 20% per annum net of all fees. While this is not a guaranteed return, it's a target return which pushes the investment manager and his team to apply the assets of this particular fund to generate an alpha return to the investors. While they were targeting a 20% as per their policy, the fund manager or the investments generated a return of 29.32% for the period from inception in February 2024 to October 2024, a remarkable return. If you extrapolate that return for a period of 12 months, you are getting a figure in the neighborhood of 35%. Compared to the peers in the market, the other special funds, that is above average return. Actually, it's an alpha return. The assets under management so far from inception up to November, this fund has amassed a whopping 0.8 billion worth of assets under management. That is about 800 million. We must normalize referring to our assets in billions. That is positivity. The target markets are local markets and global markets, and the management fee for this type of a fund is 6% per annum, which is prorated, meaning that those management fees are charged on a daily basis. So the 6% does not hit your investment account at once. Above that, there are no performance fees yet. Entry fees are nil. There are no withdrawal or exit fees, and there are zero ledger fees. That is commendable because when you compare this type of a fund with its peers in the market, the performance fees by the peers are at 10%. Initial investments to Hawk Special Fund it has been reduced from 1 million to 500,000 with the top-ups of 50,000. And again, comparing to other two peers, that is moderate enough to encourage investments, and it has a locking period of 6 months. It means that this type of a fund is not suitable for your emergencies. This particular fund or this fund of this nature is of a long-term nature. So don't put your emergency fund in this type of investment vehicles. It is also advisable to hold your investments for a minimum period of a year in order to realize or maximize your returns from this form of investing. You can access your funds after the locking period just as easily as you access the other investment vehicles, and on average, immediate to 2 days. So we'll be looking at the asset classes or allocations next. As per this schedule, for the fund manager to be able to realize such alpha returns, this fund spreads its investment or diversifies its investments both in the local market and in the international or global markets. In the local market, this fund invests in government securities, those are treasury bills and treasury bonds. It invests in commercial papers. Commercial papers are instruments that are similar to treasury bills, but they are issued by companies. And what issued by companies that is similar to treasury bonds is what we call corporate bonds. The fund also locally invests in cash and cash equivalents that would include the fixed deposits and call accounts. It also invests in Nairobi Stock Exchange, equities, and derivatives. In the global markets, the fund invests in currency trading, precious metals, commodities, international equities, exchange traded funds, sovereign bonds, and derivatives. So if you are looking into investing in the exchange traded funds individually, or you don't foster the risk appetite to take on individual investments in equities, this is a suitable investment platform for you. This kind of spread or diversification, real diversification of investments, is what partly minimizes the risk exposures or mitigates the risk in this form of investment. But we will be looking at a list of the measures that fund manager in Hawk Special Fund applies in risk mitigations to protect the investor funds and realize the high returns next. In realization of the alpha returns to investors and protection of the investor funds, Hawk Special Fund engages in the following activities as a way of risk mitigations as per this schedule. They do a lot of diversification in their investments. There are asset class limits, meaning that each form of asset class is given a maximum beyond which they cannot exceed in order to reduce the exposure for that particular class. They have intraday and overnight limits for the trading professionals. There is a trading room where there are various professionals who engage in daily forex trading, and there are intra limits and overnight limits for such activities. They also have an investment committee that offers oversight over the investments above the trading models and oversight that is offered by the trustee and the regulator. In the coming period, while the market interest rates continue with their declining trend, it will be very important to source for investment vehicles that cushion you against the declining trend. And much of those vehicles are the ones that have a product mix or a spread asset classes that give a baseline or protect the return baseline. While the interest rates that are declining are posted in the treasury bills, the funds that solely invest in treasury bills and bonds, they are likely to be most affected. And traditionally, there is a noted inverse relation between fixed securities or the bond market and the equity market, in that when the bond market returns are coming down, the equity market returns keep rising. And that is what we are witnessing today. If you are an investor with low risk appetite and you may not choose to go to equity segments that are risky individually, it's recommended, or the channel recommends, you take advantage of investment vehicles or collective investment schemes that give you a mix of equities and fixed income securities, such as a balanced fund. The balanced funds assume different names for different fund managers. And a good example is Kuza's Momentum Fund, which is a form of a balanced fund. These special funds give you exactly that product mix or asset class mix that protects you against the steep declining rates. Thank you for watching.